September 15th, 2008. Lehman Brothers collapses. 8 million Americans lose their jobs. 5 million families lose their homes. The financial system nearly dies. Congress votes to bail out the banks. $700 billion of taxpayer money. The bankers who caused the crisis, they promised accountability. They promised reform. Here's what actually happened. They got richer. Way richer. This is the story of the greatest heist in modern history and why nobody went to jail. To understand how we got here, rewind to 2007. Wall Street had turned mortgages into a casino. They bundled bad loans, subprime mortgages given to people who couldn't afford them, and sold them as safe investments. Rating agencies stamped them AAA, the highest grade possible. Safer than government bonds, they said. Banks like Lehman Brothers, Bear Stearns, Merrill Lynch, AIG, they all bet big leveraged 30 to 1. For every dollar they owned, they borrowed 30. It was a house of cards, and everyone knew it. But the money was too good. Executives took home bonuses in the tens of millions, while the foundations cracked beneath them. By 2008, the collapse was inevitable. The question wasn't if, it was when. When it hit, the damage was catastrophic. $16 trillion in household wealth vanished. The unemployment rate doubled. Suicide rates spiked. Main Street burned. Wall Street, they got a lifeboat. Here's how the bailout worked. The government stepped in with the Troubled Asset Relief Program, TARP. $700 billion authorized by Congress. But the real number was much higher. The Federal Reserve secretly pumped trillions more into the financial system. Low-interest loans, asset purchases, overnight lending. Total cost. Some economists estimate over $29 trillion when you count all the programs. The argument was simple. These banks were too big to fail. If they collapsed, the entire economy would go down with them. So taxpayers, teachers, nurses, construction workers bailed out the executives who'd gambled away their futures. And what did the banks do with that money? They didn't lend it to small businesses. They didn't help homeowners avoid foreclosure. They paid themselves bonuses. In 2008 alone, Wall Street firms paid out $18.4 billion in bonuses. That's billion with a B. The next year, $20 billion. The justification? We need to retain talent. The same talent that nearly destroyed the global economy. Now here's where it gets darker. After the crisis, the public demanded justice. Congressional hearings, criminal investigations, perp walks. Surely, someone would go to jail. In the 1980s savings and loan crisis, a much smaller scandal, more than 800 bankers were prosecuted. After 2008, one banker from a major institution went to prison. His name was Karim Sarageldin, a Credit Suisse executive. He served 30 months. The CIOs of Lehman Brothers, Bear Stearns, Merrill Lynch, AIG, not one faced criminal charges. Richard Fuld, Lehman's CEO, walked away with over $500 million in compensation over his tenure. He sold his mansion to his wife for $100 to shield it from lawsuits. Angelo Mozilo, the CEO of Countrywide Financial, the company that wrote some of the most toxic mortgages, paid a fine but kept hundreds of millions. Lloyd Blankfein of Goldman Sachs, Jamie Dimon of JP Morgan, they're still celebrated as financial titans. The Department of Justice said it was too hard to prove intent, too complex for juries to understand. But legal experts disagreed. Emails showed executives knew they were selling garbage. They called their own products junk and crap internally. The truth? Prosecuting Wall Street was politically inconvenient. These banks were donors, advisors, too connected to touch. So instead of handcuffs, they got a slap on the wrist civil settlements, where banks admitted no wrongdoing. And then they went right back to business. Fast forward to today. Those same banks are bigger than ever. JP Morgan Chase, Bank of America, Wells Fargo. They control even more of the market than they did in 2008. The executives, they're richer than before the crisis. Jamie Dimon's net worth is estimated at over $2 billion. He's called America's least hated banker. Goldman Sachs partners who survived 2008 collectively made billions in the recovery. Meanwhile, the average American family still hasn't fully recovered. Median household wealth is lower than it was in 2007, when adjusted for inflation, homeownership rates for young people collapsed. An entire generation was priced out. And the banks that were too big to fail in 2008? They're even bigger now, 30% bigger by some measures, which means the next crisis, and there will be a next crisis, will be even more catastrophic. The system didn't learn, it rewarded. So what's the lesson here? In America, justice has a price tag. If you steal a car, you go to jail. If you steal 8 million jobs, you get a bonus. The 2008 financial crisis proved something unsettling. There's one set of rules for ordinary people, and another for the elites. The villains didn't just survive, they thrived. And the worst part? Most of them don't think they did anything wrong. They'll tell you it was a systemic failure, that everyone was complicit. That hindsight is 2020, but they cashed the checks, they took the bonuses, they walked free. History won't forget, even if the law did. So here's my question for you. If it happened again tomorrow, would anything be different? Let me know in the comments. And if this made you angry, share it. People need to remember